Welcome back. Motherson Sumi Wiring is the next company on our radar. The stock is under a bit of pressure because the margins disappointed the street. Margins of the company have come off quarter on quarter and on a year-on-year basis. Mahender Chhabra, CFO of the company, and Anurag Gahlot, COO at Motherson Sumi Wiring, are with us on the show now. Gentlemen, thank you very much for joining in. Mr. Chhabra, if I may start with you. First, explain to us the margin performance. What led to the sequential and year-on-year drop in EBITDA margins to 10.3%? And will the pressure persist? Because there are some startup investments that you're doing. So will that continue to be a pain point? Will Q4 margins be at similar levels? Do they go reduce further from here?
Yeah, so first of all, thanks for getting us on CNBC. So as far as margins are concerned, like we have clarified, we are putting up 3 new plants. And whenever there are new plants, the initial ramp-up costs in terms of manpower, retaining and training the manpower, and those costs are directly charged up to the P&L, and that's the reason we see margins looking in this shape. But if we exclude the impact of the new plants that we are putting up, our margins from the existing plants are up by 6% year on year. And as far as future outlook is concerned, so like we are putting up 3 plants, out of which 1 would be operational within this quarter completely, and the other 2 will get operational in Q1 and Q2 of next financial year. So as and when plants keep on getting operational, we should get better revenue from those plants in line with the customer forecast, and profitability should get better.
Oh. So just to complete the point on the margins, and Mr. Gahlot, if you could come in, what was the extent of the investments that you made in your new facilities? Trying to understand that if it wasn't for that, what would the EBITDA margins look like? And again, if you could give that number and tell us in Q4 or in Q1 of FY26, what would be the incremental investments that you need in your new facilities?
Okay, thank you. First of all, thank you very much for taking us on CNBC. As Mahender has said, that these 3 new greenfield, if we are excluding those, and if we see the EBITDA, it is already 6% year on year. The good news is that these 3 new greenfields are in line to the expansion plan of the customer, and these models which we have won, they are new models. They are not a replacement or mid-year update of any of the vehicles. So these are the new volumes, and one of the plant has already under ramp up, and the other 2 plants are going to be ramp up in next coming 2 to 3 quarters. Now, these volumes, it's all subject to what customer is going to make, but we see a very positive side that we are expanding ourselves in line to the customer expansions.
Right. Good afternoon, gentlemen. This is Vinny joining in the conversation as well. Mr. Chhabra, just to follow up, is that then when will they start normalizing the 12 to 13% range, which you all had in terms of margins? If your plant setup is going to get completed by the second half of FY26, post that, could we see those margins starting to see that improvement back?
Yeah. So see, as an organization, we focus on ROAS. That's how we measure the overall financial health of the business. And we have a guidance that we should be delivering a ROAS of more than 40%. And that is what we have been delivering in the last 2 years. And even in the current year, if we get the orders for the Q4 as in line with the customer forecast, we should be able to deliver more than 40% ROAS. And as far as EBITDA margins are concerned, as and when these plants get into ramp-up mode, the ramp-up mode is over and the production starts, the EBITDA margin should also get better.
Okay. Anurag, what I also want to understand is that what some data points are suggesting that in Q3 seems like the EV contribution has seen a bit of a reduction. Is that a fact? And if yes, how much has it seen a reduction by?
Yes, if you are seeing that there is a reduction in EV or the electric vehicle, that is correct. And we are seeing that bit also in our revenues as well. But you have to understand that this year it's remained to be very exciting for the automotive sector because OEMs has launched many new models across EV as well as ICE, and keeping a lot of it's a heavy feature, rich feature content vehicles. So when these launches are happening, and as you have seen in our press release also, that in this quarter and the next 2 to 3 quarter in the new plants, there are both ICE and EV both. So I think it's just a matter of time. We have to see how the consumer is going to react to the new launches. And we are very hopeful because we don't never doubted our customer, and whatever they are putting the volumes to us, So I think it's going to take some time, but you will see a very positive results in coming times.
Mr. Chhabra, the 3 greenfield plants that you spoke about, which are at different stages of completion, I believe have a revenue potential of 2,100 crore rupees. Is that right?
Yeah, that's right. So when these plants reach at their optimum level in terms of their production, and if the orders are in line with what the forecast we have received from the customers, on an annualized basis, these 3 new greenfields should give us 2,100 crores turnover.
So realistically, how much of that can come in FY26 to your mind?
So it depends on the time when these get actually ramped up. So by H2 26, we expect this to kind of get at those levels, depending on the customer orders.
Okay. So is it okay to estimate that at least 50% of the potential, we're talking about 1,000 crore of incremental revenues in FY26 because of these greenfield?
Well, if other things remaining the same, yes.
Okay. Mr. Chhabra, I just wanted to understand one thing. Right now, I'm looking at the growth rate over this year, right, in FY25. For the first quarter, it was 17%, moving on to second quarter, 10%, and now the growth rate has been around 8-9%. I just want to understand, we've seen a bit of the growth rate slowing down. What is the outlook in terms of the growth that one should watch out for? Any growth guidance or number that you give for Q4 as well as for FY26?
Yeah, sure. So as far as growth is concerned, I mean, the growth is a factor of a couple of factors. It's a matter of a couple of factors. So for example, the product mix that is there and the content in the wiring harness. So today we know that customers are preferring feature-rich models, and those feature-rich models have a high amount of content and more revenue for us. So a lot would depend on the product mix that is there, that gets sold to the consumers. And if we look at, we have been ahead of the industry. So if we look at Q3, we are 9%. We have 9% growth, whereas the PV industry grew by 3%. So we outpaced the market by 6%. Likewise, if we look at 9 months, we have grown by 12%, whereas the PV industry has again grown by 3%.
So 9-month revenue growth is about 12%. And will you, based on the early indications, Anurag, do you think you can end the year with about this 12-13% top line growth?
I think it's all subject to the volumes what the customer has forecasted. We are very positive. The way we are going in 9 months, it's already 13%. So we have to see, as Mahender has suggested, that what sort of consumer are buying the models. So the higher the model, the higher the content, and the sales value for MS will goes high.
Okay, and just the last one, I just want to understand raw material trends and the raw material prices. They have been quite stable, right? Anurag, is there any change and any concern on that front?
I think, raw material costs are, you have seen there is not a very big change, or there is no abnormality into that.
Thank you, Mr. Chhabra and Mr. Gahlot, for joining in, and wish you all the very best. Look, enjoyed chatting with you today. We'll slip into a very short break on that note. We'll come back with more on the market. It's in the red now for all the benchmark indices. The Nifty is closer to 23,500, down 80 points. Sensex down 360.